EU stock markets are influenced by political developments, sector performance, and broader economic factors. Here is a summary of the latest news and trends. Latest market movements as of October 7, 2025. Political turmoil in France. Markets have been reacting to the unexpected resignation of French Prime Minister Sébastien Lecornu. Initial drop. The news on Monday triggered a sharp sell-off in French stocks, CAC 40, which dropped over 1%. Broader impact. The broader pan-European STOXX 600 briefly hit a record high before political uncertainty, especially concerning the French fiscal backdrop and budget negotiations, led to slight losses on Tuesday. Sectoral hits and gains. Major banks and insurers, e.g., BNP Paribas AXA, in Paris, experienced pullbacks, while luxury brands, e.g., LVMH Kering, rebounded after a ratings upgrade. Bond market. French government bond prices dropped, and the yield gap between French and German 10-year bonds widened, indicating that markets are treating French debt as riskier. EU stocks close. European stocks overall finished a choppy session marginally lower on Tuesday, with the STOXX 600 closing slightly down. Sector highlights. Semiconductors/tech. A rally in semiconductor stocks helped offset political losses on Monday, driven by news like an AMD chip supply deal with OpenAI. Energy. Shell saw gains on Tuesday after announcing that trading in its gas division is expected to be significantly higher in Q3 compared with Q2. Current market trends and driving factors. Political and geopolitical risks. Political instability in key member states like France and geopolitical uncertainties globally are major factors driving volatility and investor caution. Sector outperformance. Technology was the best performing sector in September, with Dutch semiconductor equipment giant ASML Holding being a standout performer. Industrials also performed well, including companies like Airbus and Schneider Electric. Defense and industrials are seeing long-term tailwinds from increasing European defense budgets. Monetary policy and valuation. Favorable policy. The European Central Bank's move toward monetary easing, with inflation nearing its 2% target, is seen as a key support for European equities. Attractive valuations. European stocks are often viewed as more attractively valued than their U.S. counterparts, with a lower cyclically adjusted price/earnings CAPE ratio. Higher dividends. Europe offers a substantially higher average dividend yield, around 3.3% compared to the U.S. Fiscal stimulus and reform. German investment. Germany's newly announced infrastructure and modernization program, worth €500 billion over 12 years, is a major fiscal stimulus focusing on investment-driven growth. Regulatory focus. The European Securities and Markets Authority, ESMA, is working on reforms for more integrated, accessible, and competitive financial markets, including a focus on burden reduction and digitalization. Trade concerns. The prospect of increased trade tariffs, particularly from the U.S. and the EU's decision to raise tariffs on foreign steel imports, presents a downside risk due to Europe's high trade-to-GDP ratio.